Yo, 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 what's happening, ladies and gentlemen? What's going on? Good evening, good afternoon, good morning, wherever you are in the world. New York, what's happening, guys? I hope everyone is doing well today. Mad game, mad trading day. Brilliant price action by Bitcoin. We're going to be diving deep into understanding what the story is with Bitcoin. But the unfortunate truth is the shorts have paid the price. And that's what we're going to be talking about today, ladies and gentlemen. Who's in the room? Who we got in the room today? Your t-shirt business is going to be taken. Oh my days, man. We could have got into business together, bro. I would have helped you out with those shorts. What's going on, guys? George, what's happening? Patrons, I hope you're all in here. Sack Trades, what's happening? Good morning, guys. What is good? All members of the channel, what is happening, guys? Happy days for Bitcoin. Pancho, you seeing the madness on dollar yen? Wicked, wicked, wicked. That's good, man. That is good. Okay, then, guys. So, let's roll with the flavor. You know what day it is today. It's Tuesday. We know that there are 3 things guaranteed in life. Death, taxes, and I have to go pick up my daughter just before 3 o'clock. So I'm going to get this stream rolled out. Mad love and respect to everyone passing through to today's stream. Be sure to like and subscribe so you can roll out with tonight's stream, so we can summarize the chaos of crypto after the New York session closes. All right? So let's roll with it, ladies and gentlemen. Let's have a conversation. Cool. All right, then. Here we are. Let's kill the music. It's time to concentrate. What do we know? Where has Bitcoin been? What has it done? So that we can understand what it's likely to do next. Now, ladies and gentlemen, if you recall, on the Sunday night, we had a conversation about what was Bitcoin doing in this range right here. Okay? Bitcoin seemed to be holding this zone. The speculation of the big game itself was making people believe Bitcoin's going to drop, Bitcoin's going to rise. Frankly, Bitcoin did nothing. And that's okay. Yeah? You see, what we've got to keep in our minds is this. Ultimately, the market maker is only interested in pools of liquidity. That's all it is. Now, regardless of whatever is being said about crypto, about Bitcoin, whatever, it doesn't matter. Why? Because it's all about how can they use that information to make people commit liquidity on the belief that price is going to go up or price is going to go down. Naturally, the market maker, he is the facilitator of this business, this mechanism that we use in terms of trading to try and exploit profit from this industry. Now, this industry, in my opinion, is probably one of the most lucrative industries in the world. Okay? And what I want to try and get across to you guys is the understanding that if you're able to really exploit the way they move price, then you are literally one step ahead of millions of people that are trying to take money out of this marketplace. 90% of traders lose in the game of trading, ladies and gentlemen, because it's based on emotions and greed. And the market maker does a good job of doing that. So, first things first, what I like to do is I like to look at where are the levels, where are the orders currently sat in Bitcoin so that we can understand what has been going on and what is likely to happen next. Okay, cool, here we go. So what have we got here? This is the Bookmap, ladies and gentlemen. It's a platform. It is a premium service. So if you are interested in this, go to Google and check it out. Bookmap.com. Now, this facility shows us where the resting orders are in the order book for Bitcoin based on limit buys and limit sells. Okay. Now, volume is huge in the order book. It's about 50% favoring higher prices. Okay, that's what this is saying. There is an imbalance in the book that shows that limit sales are being favored. So naturally, they're going to be looking to try and push price higher based on what the order book is saying. All right. Now, what I like to do is I like to zoom out just to see where the liquidity is stacked in the chart. All right. Now, of course, you can see, ladies and gentlemen, not so long ago, we were looking at the 30,000 range and we were saying to ourselves, look, man, is Bitcoin going to come down to this area? There's 408 Bitcoin in this zone. But if you see right here, guys, there is an influx of Bitcoin, 330, 142, 208, and they're all favoring higher prices. What we've got to try and understand is, what is the point, or when is the time for us to get in to try and exploit the idea that they're looking to move price higher? Okay, so let's take this out, kill this for a second. Here we go. Let's take it back to Sunday night, guys. All right. Now, Sunday night, we were anticipating Bitcoin to do something during the big game. All right. Now, if we actually zoom out, you can see that we have come from a very interesting formation. All right. So I'm going to move out here. I always like to do this because it gives me structure in my mind as to what I can expect moving forward and where we are in the cycle of cryptocurrency, or the current cycle that the market maker is trying to move away from. Okay, what is going on here? Hold on a second. There we go. It comes back in a minute. That should solve the situation. Come on, man. You can't do this to me. Here we go. Right. So based on the 1 hour time frame, we understand this to be a W formation. Okay, they've come away from the range. We would assume that this is a level 1 consolidation zone. We would then assume that this could be the development of a level 2 moving up towards a level 3. So the principle would say, if the market maker is in line with his cyclical move to the upside, we are expecting Bitcoin to come up higher and break away from this area here. And the way they would be able to do that is by inducing traders to commit longs into the chart. At the same time, they will be attacking the short liquidation points in the charts. All right. So if we actually go up towards 45,909 and pull up this chart, all right, see how much easier it is on the eyes for you. Mad love and respect to my guy Shadow, who just gave me this link about, you know, getting rid of all the white on the screen. Okay, it's much easier on your eyes. So look, this is what I mean about the shorts have paid the price. The market maker over the last couple of weeks has been marking price down. Okay, he hits price to the downside. Retail trader is going short, 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 short. This is where the narrative of Bitcoin is going to collapse to the downside, and it's going to just wipe out and go all the way to 30K, 20K. Okay, that's fine. And first things first, guys, let me remind you as well. I'm a day trader. All right. I'm always looking for quick scalps. I'm always in, fast out. I have no interest in leaving liquidity in the charts because I know the nature of the market maker. At any point, he can reverse price, and where I may have a profit of X amount in one point, me being greedy would leave it there, and then I would see it come all the way back down to my entry point. And you can see this sort of psychology is happening in the charts as we speak right now. Because look, below here are all the liquidation points for the longs. And we have been taking out those longs quite well over the past few days. So if I bring up this chart right here, you can see that these were all the long liquidation points from the highest point roughly around 41,500. Okay, and then when you look at the chart itself, you can see that they have now changed the narrative, and you can see they're trying to work their way up towards the short liquidations. This is what leverage trading is about. It doesn't matter if someone believes Bitcoin should be priced at X amount or whether it needs to go down lower. Ultimately, it's all down to the flow of liquidity and where the market maker can make a return on his positions to the upside or to the downside. That's all it is, ladies and gentlemen. It's just the hunt for liquidity. All right. Now, the reason why the shorts have paid the price today, guys, is, or should I say ever since the big game, is because the market maker was consolidating in this range. Everyone had anticipated that Bitcoin was going to go down. Some people anticipated Bitcoin to go up. But the disparity between short sellers and longs in this area here showed that there were more people going short. And you can see that from all these 50x and 100x positions, which is like the baby blue color. And then as we go higher up, you can see these are the 25x liquidation points. Now, anyone that trades with 25x is putting up more margin. That means there's more liquidity for the market maker to send price back up towards so that he can realize a return on his longs that he's been building to the downside. Okay, so remember, guys, the market maker goes long when price is dropping because that's how he builds his longs, because you can't buy if no one sells. And likewise, you can't sell if no one buys. And it's the market maker that initiates that transaction all the time. Binance has nothing to do with it. All they do is they connect you to the market maker and they charge you a limit order or a market order. All right. Now, what can we do with price action as it stands? The principle is saying Bitcoin is now on its way to try and attempt to take out this previous zone of liquidity. All right. The 800 EMA is flat on 1 hour. The 50 is flat. The 200 is flat. We want this so that once the moving averages start to expand, which is what you can see right now, we are now waiting in essence to see their worth if the momentum is going to come into the charts. All right. Some of you guys might like to use stochastics. So here you go. This is the TDI. This is in my opinion, it's a posh RSI. Okay. And the green line is the RSI. The yellow line is the market's baseline. So across all time frames, if you put this on the 1 minute time frame, the middle yellow line will represent the 1 hour RSI. Okay. Now the red line is the signal. So the principle says that when the RSI, the green line, crosses over the red from the downward movement, it would imply that things are looking to move to the upside. Now, the idea is that when the RSI comes to these bands, which act on the principle of volatility bands, you're getting movement. Okay. And as you can see during this time in the charts, ladies and gentlemen, on Sunday, we didn't really get that much movement. Price was coming up to the bands, coming straight back into the market baseline, but the volatility bands themselves were pretty stagnant. Now we've got this expansion out. So we can verify that there is strength in this move in reference to the market maker. We can verify that he's now making his run towards shorts to the upside. Okay. Now, keep an eye on this. With this RSI, there are a couple of things that you can use on this. Can you see the peaks in the RSI? All right. You can see they're like little mountains, but we understand them to be like shark fins. All right. What you're looking for is whenever price or the RSI comes outside the volatility band, you're anticipating volatility's coming in and they're getting ready to try and come back into the fray, because that's one of the market maker strategies. Mean reversion. Okay. They even admitted it themselves. All right. When you see this RSI come to the downside outside the blue volatility band, the principle says that when the RSI stabilizes and comes back into the RSI the volatility band and crosses over the signal line, which is this red line, you are effectively waiting to go long on this basis. However, you can't just simply use this on that basis. Trading ain't that simple, which is why we will always go back into the charts. Now, here is the hybrid concept at play. You know that the hybrid, based on this volatility band right here, when they broke out of the volatility band, you can see that we have a red vector candle in this range. Now, we understand something about this vector candle. And this vector candle implies that the market maker is going long at the lowest price in the highest range. So he's building longs by inducing retail traders to go short. You wait until the next candle comes into fruition. All right. Session times is important. This happened in the Asian session. So Asia was preparing price for the UK and the US to mark it up to the upside. All right. Now you can see how they stabilized. Notice the RSI outside the volatility band goes back inside. Your entry point by principle would be in this zone. This is your area. And your profit target would be by principle towards the next volatility band, because you would assume that price was going to continue up. Now, if we look at price action here and then we look at here, well, we technically don't need the RSI. Why? Because look at how we break down the charts now. Market maker has moved price to the downside, induced the retail traders to go short. He's gone long. He solidifies their commitment by spiking price lower and bringing it back up. We come into the UK session. You can see that price has deviated away from the 50 EMA. So we naturally expect them to revert back to the mean. We see these 2-3 candlesticks right here, stopping volume. And stopping volume candles are an indication that the market maker doesn't want to induce too many shorts to the downside, because if he does that, he will then be releasing the liquidity down here and he would be obliged to fulfill that obligation, which means that he would have to start building more longs at lower prices and thus give the retail trader more time to realize a profit. So then if the retail trader is realizing a profit, the market maker hasn't got any positions for him to close his, to open his longs from, because no one in essence has got any liquidation points or any positions available for him to take. That's the sweet spot. Okay. So always pay attention to the candlesticks. You can use RSIs in confluence with things, but always go back into the chart and understand the narrative of the psychology of price action. So if Bitcoin now can make its way back up to here, because it's still got a lot of work to do, please, guys, do not rush into the hype that Bitcoin now is going to make a move towards 100K. Don't do it. You have to wait for confirmation, because Bitcoin, quite rightly, can actually retrace back down and test the 50 EMA and then try and make its way back up. It can even come all the way back down to here and start trying to induce more retail traders to go short so that the market maker can go long at lower prices and realize a return on his shorts that he has built on the way up with this move. Which is why I say to you, ladies and gentlemen, please get into the habit of paying yourselves as often as you can. You're not going to miss out on anything. Okay, if I were to remove price on the charts and all you saw was candlesticks, all you'd be waiting for is just movement from one zone to the next and trying to profit from it. But the problem with the idea of crypto is people are so fixated on price. Naturally, I understand that, because if you have 100,000 coins of whatever coin it is and you brought at 2 cents and that coin goes all the way up to 50 cents, you're sitting nicely. You know, you're enjoying the returns. Happy days. But the problem is, people in crypto coming into trading and trying to apply that same concept when they have live trades, and they think that that's going to be the same case where they can sit and hold trades and start adding to their margin all the time, when they don't realize that the market, even though it looks like it's moving up, at any moment it can snap back down. That's why you've always got to pay yourselves, ladies and gentlemen. The idea is for you to keep coming to streams, keep playing the game of trading, and you're always in the arena of trading. It's not about trying to go in for a one-trick pony and then leave. All right. So always pay yourselves if you have yourself a good position. And if you don't want to pay yourselves and you want to lock in profit, always do something like that. So if you've gone long from this area here, lock in the profit. And if it goes beyond this point, then it's probably going to look to start to come back down again. At least you've earned your money in this move to the upside. No one's going to take it from you. Okay. Are we cool with that, ladies and gentlemen? The only thing I haven't listened properly. Nah, don't worry about it, Tim. Don't worry, man. You'll get it. Don't worry about it. How is everybody today, man? Sorry, I've just been paying attention to the idea of just getting this information out to you. Kyle, Yoltino, don't forget granularity on alpha and beta are not the same at the same levels. Yes, I understand that. The thresholds for alpha are slightly different, although it uses the same concept formula as beta. Yes, I completely understand that, Kyle. So in essence, Kyle is talking about this. So this is high block on the beta version. This is high block on the beta on the alpha version. All right, the alpha version is sweet. It's a little bit better for anybody that looks to try and scalp. Okay, why? Because if I can see price down here, all right, and I can see that it's holding this area, I can look to the upside and say to myself, well, what are the chances of price coming up into this range to try and take out $6 million worth of short liquidations and potentially what else, 6.24 or 6.3, 6.23, 6.56, 5.2. I can make those guesstimations and say to myself, okay, if momentum is favoring higher prices, the moving averages are trading upwards, the chances of me seeing price getting into those zones is going to be based on those factors. I'll go long and try and take the trade from that principle. Okay, but this chart right here is just an indication of the psychology of traders right now in the charts with Bitcoin between the range of 47 and 42. You can see that we've got more short liquidations than we do have longs in this given range. There's probably more long liquidations down here, but to the visible eye and the range that we see, we know that there are more short liquidations. All right, and we're trying to establish the momentum by the market maker if he's going to continue to move price higher from this point and eat away at those short liquidations. Because this point in the chart up here, ladies and gentlemen, is the last point in the zone where the market had induced traders to go long. So there are guys right now who have had their long liquidation points hit, and then they've been looking for an entry. Okay, and now it's starting to slowly come up. There are some guys that are still holding on to trades because the 25x traders, their liquidation points are all the way down here for their longs, so they're sitting comfortably. But all the 100x traders, their liquidation points are all in this area here. and they're getting eaten alive because the market maker, in order for him to go long at a higher price and close it at a higher price, he has to move price down lower and trap traders to believe that price is going to come down lower. But when it comes down towards these moving averages here and starts to stabilize, things start to show a different direction. So it's always going to be in line with the market maker. We can have a look at the whole and half numbers themselves. So you've got the 43k range. This is a phenomena in the chart. If you mark off all the whole numbers and the half numbers, so anybody new to the channel that's passing through, mad love and respect for clicking and subscribing. Happy days. Listen, I've got a little test for you. Go back in the charts, mark off the key numbers in Bitcoin: 43,000, 42, 41, 44, 45. Do it in that range, okay? And go back in the charts. As long as you've got these indicators, which you can download free of charge, it's pinned to the top of the chat if you are new, and you can start there, and all the information that we talk about is available on there. It's free of charge to get these indicators, all right? So go check that out. What I want you to do is just to mark off the whole numbers and find vector candles that break through them from below and from above. Let's start off here. Look. Big green vector candle breaking through below the 43k range and breaking out of that zone. Why? Because the market maker likes to build his longs below these numbers so that when he breaks through that range, he gets the best possible fill. Why? Because he's been trapping retail traders to go short. Look at the pins. 1, 2, 3 pins to the low right there. The retail trader's trying to force price to the downside because he believes it's going to break down because it's trading below the moving averages. Unfortunately, this is the basis of our pattern. We like to see patterns appearing in these ranges. So go back in the charts and do that, guys, as a little exercise to train your eyes to be observant to this sort of behavior in and around the charts. Okay? Look at this. Red vector candle appearing above the key 43,000 zone. Why is it every time you see a vector candle at this number, they're breaking through it with aggression? Yeah? And it's coming away from a range because they did the business right here and built the shorts at the highest point from the market maker by inducing retail traders to go long. And then he hit price to the downside because the narrative was that they were favoring lower prices anyway. Because if you look left, there's a vector candle wick right there. Sorry, this is a wick. You can see there's another wick there. You've got vector candle wick right here. And you've got some more down here. So they have every reason to make the retail trader believe it's going down so he can build his longs below the key 43 zone. Sounds like a crazy concept, ladies and gentlemen. But let me just break it down to you like this. You go into a shop, okay? And you walk into this shop and the first thing that you see is $24.99 is the price that they want you to pay for this item. Now notice it's not a whole number. It's $24.99. That means it's not £25. So they want to give you the impression that it's not that much. It's still a little bit less. So that impresses our minds to just go and buy. It's only $24.99. Actually, it's 25 quid, but you get the idea. It's easier for you to accept. But when it comes to you seeing a sign that says £300 off, $500 off, $1,000 off, that's more impressionable to you. And you're like, wow, look at that, $1,000. That's a big discount for me. Happy days. You're going to do something about it. The principle is the same in the charts. 43, 43,500, 44, 44,500. Pay attention to what Bitcoin does in and around these zones, ladies and gentlemen, and you'll be amazed at the phenomena of why price is impressionable at these points in the chart. Okay? Wonderful. How many people are in this channel right now, brand new to the Traders Reality world? We need to introduce you guys to the pattern watchers. How many of you are brand new to the stream, ladies and gentlemen? Mad love and respect for passing through. Face reveal, face reveal, face reveal. Yes, you will get your face reveal. You will get it. Which face? Who knows? I've already revealed myself. Go in the thumbnails and have a look. You'll probably see it. Just go back in the streams, look at the thumbnails, and you'll see my face. All right? Okay, then. I've got a couple of things that I want to show you, ladies and gentlemen. All right? New York is on its way. I've got a couple of things I want to show you. As it stands right now, I took a trade on the SPX. All right? I took a trade on the SPX. And the great thing is on MT4, SPX, when you trade this asset, which is the S&P 500, all right? This trade last night at yesterday at 10 o'clock in the morning, well, different time zones. But I took this trade last night. In other words, you can trade this after hours, okay? And I took a long on the S&P 500 that they were going to start to come back up towards this previous vector candle, okay? Now, Patreons, I know you know this right now, okay? But I said that today we will see a gap up in the S&P 500 to absorb this price action, all right? So this is the S&P 500 on IC markets. Now, if I go over to the S&P 500 in TradingView, there's your gap. They gapped up, all right? There was your gap play. Now, what's blowing my mind is the fact that this move happened here, and I should be trading in options because I would have been able to open some options so that I could exploit this gapping play and hit a certain price. I didn't do it. Never mind. But keep an eye out on that, ladies and gentlemen. Okay, this is an MT4 platform. It's an old platform. All right, gives you access to a lot of assets. Okay, you've got all the indices and what have you where you can trade them. Really cheap spreads. But a lot of my work is done on TradingView. I scalp on this platform, dollar yen. So I've got more. I've been on this platform for so many years, guys, and it took a while to get Mr. Mike Dutch to get me away from this, but I'll always call this home. All right, cool. Anyway, as it stands right now, ladies and gentlemen, we have got the S&P 500, which is acting favorably to the news announcements, and of course, the fact that things are starting to slow down in terms of tension with overseas. Okay. S&P 500 coming back up to recover the previous red vector candle. Happy days. Let's have a look at the yields. What are the yields doing? They're moving up, guys. Why are they moving up? Because traders are favoring risk on assets. So there is no threat of chaos across the board in the marketplace. The only issue that we've got is, of course, the interest rate hikes that are due to be rolled out in March. But the market is absorbing information now, and it's going to put its impression as we speak. Retail traders, institutional traders, banks, they are not going to the government for safety, which means that gold is dropping. Okay, there she is. She's come back into the previous pool of liquidity that we spoke about on Sunday. She's hit that range. Traders are taking their money out of gold because they're not favoring safety anymore. They want to start making some money on risk on assets. Currency pairs like dollar yen shifting out of the range. Okay, currently in a long with dollar yen to the upside, and we've managed to exploit some entry in this area here to shift to the upside to recover some previous pools of liquidity, to favor higher prices, to take out the buy liquidity in this area, to get traders to go long, in essence, to try and reverse it back. Okay. More importantly, why is Bitcoin not doing anything just yet? This is probably why. Okay. Have a look at the USDT chart. Is it possible that we could make the assumption that the sentiment of retail traders or traders across the board when it comes to trading Bitcoin, because USDT dominance is not just for Bitcoin, all right? It's for every single coin that is trading against USDT. So is this move to the downside by USDT dominance, is it coming down because favorably traders across the board are now looking for risk on assets? Does that mean we're going to start seeing some more upside potential? If we have a look at the altcoins themselves, who's the winner in the altcoins? Look at that. All I see is green. All I see is green. Big winner is GRT. Nice move to the upside. Graph coming up to the 800 EMA. Needs to stabilize in this zone right here. We've also got Cadena, some nice movement up. Most of the altcoins are trading above their moving averages. Naturally, we expect a little bit of a retrace once we've established some momentum in the charts. Remember, guys, my video on the principle of 3. 1 push, 2. Could we get a final hit? Not too much fussed about this zone because it actually came back into that range. So I'm looking for clean breaks away from the range. So could Cadena end up and recover back up towards this zone right here? Be mindful, we are at range daily high, so we expect them to pull back a little bit in this range. Gala doing great, coming back up, testing the 800 EMA, coming up towards previous pools of liquidity, obtained the previous zone right here and recovered that area. So the market maker now has realized the return. He's now marking up his shorts. How long he favors shorts for is going to be based on how many guys are actually short and their liquidation points are being taken out. Okay. What else have we got? XPR, Proton. Not that much activity, but you'll notice, guys, that most of the altcoins are actually doing the same thing. Okay, Alice, man, she's taken a beating, but she's coming back up, trading away from the psychological ranges, which then leads me over to save you guys going through all these altcoins. If you want to know where you stand with the whole marketplace, go to the totals chart. This is where we are. So, $1.95 trillion value in the crypto market space. Now, this is something important, all right? This isn't new money because the principle says if it goes above the high of $2.38 trillion, no, sorry, where is it? Yeah, if you go back to the high, right, of the market cap at 2.96, people are saying that if it goes above here, it means there's new money. But who's to say that new money isn't coming in here now? What if old money is still in here waiting for it to be triggered up here so that they can step back in, and the new money that's made the money on the move back up takes it out, and then the old money comes back in to move it back up again? All right, so that's just an idea for you guys, just to understand where you are in terms of the crypto value being pumped into the marketplace. Where's the money coming from? And it's not about really where it's coming from. It's what idea is it giving to us about the way they're moving price across the board in various assets. Let's have a look at the altcoins themselves. The altcoins are all trading above their psychological ranges, trying to break above the 800 EMA. Happy days. What are we waiting for? We're waiting for further movement. We've got previous areas right here. If any red vector candles in the charts in altcoins, so you look at the market, you look at the total market cap for the altcoins, go and find an altcoin and say to yourself, is there something reflecting this sort of behavior? So if I split the chart and do this, and I can see a red vector candle right there, I'm going to look at Ethereum and I can pretty much match the same sort of behavior in this zone right here, as you can see. Yeah, look at that. There's Ethereum. Oh, this is on the daily and this is on the hourly. So let me just bring up the 1 hour time frame. Let me just bring it up here. So here we go. Yep, we got some vector candles there and we got some more zones up here in the chart. So if I look left, Ethereum has obviously recovered it. Okay, so Ethereum's a little bit extended, but it's now looking to like try and rise slowly to the upside. That's what I want to see. I mean, last week's high would be, it isn't a promise, but it's a desire, to put it into that perspective. Let me look at Matic. Matic coming up. There we go. Matic is in line with the total market cap. All right. So you can use the confluence of the market cap, because the market cap in essence would move. Okay. And certain altcoins might not be trading in the same way, because some altcoins might actually be trading below the psychological ranges. They may be very extended away from them, like AVAX. CTSI, where is that? Looking at the chart right there, it's slightly away from its moving average. It's not going above its 800 EMA. It's just about gone above the 200 EMA. All right. We've got Ren. Where's Ren at? What have we got here? Yep, trading greatly away from the psychological ranges, still below the 800 EMA, but the majority of altcoins are actually trading above the 800. So in other words, guys, you've now come to the idea that you really want to be paying attention to altcoins that are moving above the 800 EMA, because that's where the money is being pumped. Because if the grand scheme of the market cap for the altcoins is showing that they are trading higher and they're going above key moving averages, coins like this seem to be struggling a little bit. That doesn't mean that they won't break out. They're just not moving yet. So it's good to keep an eye out on these. Okay, wonderful. So what else have we got? I thought crypto is new money. You know what? Yeah, crypto is new money, but it's those in crypto, you know, are they using new money to, you know what I mean, man? They get me all twisted up like that. Let's have a look at BNB. BNB's moving up. We've got some nice spike to the upside by BNB, but this was a stop hunt rise drop and then continuation back up. See, BNB, one of the higher market cap coins in the altcoin industry itself, would reflect the total market cap. Because BNB, yeah, it's a big coin, a lot of volume traded, utilities all over the place. So we can understand why this is sort of reflecting the price action of the total market cap. Okay? All right then, guys. So what are we going to do? Go back into this. Bitcoin. Let's just break it down a little bit. Bitcoin right now has taken out. Let's bring this here. Yeah, this is what I was going to talk about. Bitcoin and Ethereum. Right, so the video that I just done was talking about why I favor Ethereum over Bitcoin in terms of trading. Well, look, man, Ethereum just does a great job at moving from zone to zone. Bitcoin just takes too long. Okay? And you can just clearly establish that with Ethereum itself, whenever it trades above a moving average, it always likes to come back and test it, and it does a good job of doing so. Bitcoin likes to play around for a little bit. It stabilizes. You know, it's going to be responsive to whatever all the other assets are doing, such as dollar yen, gold, the treasury yields, the SPX. It's just literally all over the place. It's a fashionable coin. Likewise, Euro USD is one of the most heavily traded currency pairs. All right. And it's a crazy currency pair to try and make sense of because everybody's trading it. Now, when you look at other currency pairs, you tend to see that there's easier movements in, for example, pound yen, dollar yen, Kiwi yen. Love the yen pairs. All right. Although they are treacherous at times, they're easy to trade because they like to respect levels. I traded before I came into crypto. I was trading dollar yen and I stuck with dollar yen for a good 6-7 years to master it, to understand how it behaves, because I like to really just dive into one currency pair and study it. I did exactly the same at the start of this channel. I focused on Ethereum was the first coin that I focused on because I just watched her behavior and I found that she was trading so much better than Bitcoin. Bitcoin was too rangy, didn't do much, but now we've got this disparity. Both Bitcoin and Ethereum move together, all right? Just before Bitcoin's high to the 67 mark, okay, Bitcoin started to take its time before it broke down, whereas Ethereum actually broke down. So go and watch that video, the last video that I uploaded. It will put that into perspective for you. Okay, so moving forward, guys, across the board in, of course, the news, we can see that the sentiment behind what's going on with Russia, you know, things are starting to slow down. All right, look, Russia, Southern Western armies returning to bases. The marketplace is accepting that. It's welcoming that. So people can now go back to trading. All right, that is evident with the SPX. Look at that. Nice, strong close up, moving up. Great start to the day. Bitcoin futures moving nicely, but not as much as I would expect them to. What I believe is going to happen, guys, they're moving dollar yen. All right. They're moving their money out of gold. Okay. They're moving. The government's trying its hardest to try and get people to put money into bonds by advertising nice yields. Okay. But I believe Bitcoin is probably going to move at the start of the hour, all right? Because they would have made their moves for the start of the session, because New York, in essence, has only been, the futures markets have only been open 15 minutes. New York, of course, started 8 a.m. News plays comes out half an hour later, 8:30, okay? And now we're in the swing of trading. Both London and Europe itself is now trading alongside the US session. Go to Forex Factory, pull up the marketplace, and you'll see down below, and it will show you the session times. You can see there's the overlap right there. So we've got a lot of liquidity hitting the marketplace, ladies and gentlemen. And if you actually join these guys, if you just sign up to them, it doesn't cost you anything, but if you join them, okay, it will actually show you the percentage of liquidity that is being exchanged in the Forex markets between London and New York. That doesn't mean that there isn't any liquidity being exchanged here. You can tell they're putting liquidity into Bitcoin because they're moving away from the range. Okay? So, ladies and gentlemen, you know what time it is, guys. These are the situations you need to be aware of when it comes to trading Bitcoin or Ethereum. Be mindful. Bitcoin has actually moved into its range daily high. We normally expect Bitcoin to pull back from this range. It's still trading above the 5 and the 13 EMA, okay? By the principle of 3, we could anticipate that price is likely to repeat this sort of fashion a little bit higher. Be mindful, the retail trader's going long right now. That's not your job yet, guys. You have to wait for the retrace. Now, if Bitcoin does maintain its position above the 5 and the 13 EMA on the 1 hour time frame, dive into the 15-minute time frame to try and establish your likely entry point, okay? It keeps on staying above that range, but be mindful. They've made the move since yesterday. We are expecting a little bit of a pullback. The narrative is to see price move higher, but before it moves higher, it's likely to pull back. So just keep an eye out on the 5 and the 13 EMA to establish the flow of liquidity, the flow of momentum in the charts. Another thing, yes, there is lots of shorts that they can come back up towards. But in order for them to come back up and hit these shorts and keep these short traders committed to their charts, they need to bring price back down again to start eating some of the long liquidation points so that they can get more traders to go short, because their belief is that they still think Bitcoin's going down. Retail traders are going short at the wrong time. And that's evident with them actually marking up price. As you can see, if I zoom into this, you'll see very closely that they are actually trying to go long in these zones. Wait a second. Here we go. Look, $27 million worth of shorts were opened. $13 million worth of shorts were opened there. And $13 million worth of shorts were open there. But if you noticed, they spike up and then they come back down. The next candle, the green candle sees the shorts open. The next candle spikes up and hits the liquidation points for the 100x traders and the 50x traders. Ladies and gentlemen, just be mindful with your trading. Don't fall into FUD. Don't fall into hype. Just pay attention to price action. Guys, if you are new to the channel, mad love and respect for passing through. It's a pleasure and it's good to be back. Be sure to roll out to tonight's live about 10 p.m. where we're going to finalize what has Bitcoin done since the New York Open. All right? Have yourselves a wonderful evening, Patreon, and morning and afternoon. Patrons, I'll be updating you very shortly. Mad love and respect to all of you, and I will catch up with you later on. Take care of yourselves. Peace.